Good day to one and all. This is Dr. Sivaraman of iknowindices.com. So I'll be presenting Asian session live market analysis on 17th June between 5 and 5:45 GMT. And I'll try to give the forecast or the expected market moves for this particular week, 17th to 21st of June 2013. So let me give the derived forecast with the help of the slide, and then later on I'll try to explain to you how exactly we can read the market for today and what are the expected type of moves which could happen during this particular week and the course of this particular week. Now, the expected market moves for this week, 17th of June, today Monday, swing and firm up moves are expected during Japanese session. They are pertaining to that of the numerator currencies. So Euro and GBP are expected to gain levels during the Japanese session, followed by a firm up move during start of the European session, and late European session a dip or a slight drop is expected as a week beginning false move. And this is the third week of the month, so they are expected to make the trending move, and in the trending move what they do is first day of the week they make the week beginning false move. So what they intend to make during the rest of the days, just opposite to that is expected to happen on the first day of the week, that is week beginning false move. So today they are expected to make the slide in the case of Euro and GBP, and in the case of USDN and USD CHF during start of the European session they are expected to make a drop, making the USD weakening move, gaining in Euro and GBP and weakening in the case of USDN and USD CHF. So they're strengthening in the case of strengthening in the case of yen and CHF. And so they are expected to make the USD weakening move in all the four majors during the start of the European session. And then later on during the late European session, they are expected to make the USD gaining move. In the USD gaining move, Euro and GBP are expected to make the drop, and USD yen and USD CHF are expected to gain. At the moment, if you look into that of the market, you can see that Euro is making 24 pips negative net change, that is USD gaining move is shown, and USD yen is showing 57 pips positive net change, that is USD gaining move, and GBP is showing 8 pips negative net change, a nominal USD gaining move, and USD CHF is making 34 pips positive net change, a good USD gaining move. So the majors in all, the numerators are showing the negative net change and the denominators are showing positive net change. As a result, you find in the four majors the USD gaining move. So this is how they are expected to make the USD gaining move now during the start of the Japanese session, followed by that of the USD weakening move during that of the late Japanese session and early US session. Then late European session they are expected to make the USD gaining move similar to this. Then afterwards, during that of the US session, they are expected to make the swings. As if nothing has happened in the market is lackluster, and that is how they are expected to make the swings during that of the US session. And that will be the type of move we could see. This is the expected market move derived from that of the algorithm. So the market can vary and we have to fine tune it with the help of the market reading technique. Now 18th, tomorrow, they are expected to make a dip during the start of the Japanese session in the case of Euro and GBP, and rise towards close of Japanese session. Swing and slide moves again during that of the European session, and a quick rise move during that of the US session. So first day of the week they make during the trending time the first day of the week they make the false move. Then the second day of the week they make either way stop-ins. Second day, this happens to be 18th June, they will make either way stop-ins, upward stop-in followed by downward stop-in and then quick rise. Then 19th Wednesday, they are expected to make the swing and rise during that of the Japanese and also during the US session, as well as European as well as US sessions. So they are expected to make the trending move during that of Wednesday. So after making week beginning false move on Monday, then either way stop-ins on Tuesday, really creating the confusions to that of the traders. They are expected to gain the levels in the case of Euro and GBP. But during tomorrow's move, they are expected to considerably make the gains in the case of denominator currencies, USDN and USDCHF. They are expected to gain considerable levels tomorrow, 18th. Then afterwards, holding them in a range, they are expected to gain the levels in the case of numerators on Wednesday. After gaining the levels in both the denominators as well as the numerators, they are expected to make again the swing and rise move on Thursday during Japanese session, followed by swing and rise during US session as the contrarian move to gain levels in all the four majors. So they will initially gain the levels tomorrow in the denominators and day after tomorrow in the numerators, and on 20th they are expected to gain the levels both in the denominator as well as the numerators alternatively, and thereby you will find the crosses will exhibit a massive gaining move, especially the yen crosses and also the European crosses. Then on Friday, the weekend, they are expected to make the swing and rise during Japanese session and swing and quick rise during that of the European session. Afterwards, a quick dip or a drop and then rise during that of the US session as a either way stop-in. So on Friday, they are expected to, once they make a bullish gaining moves on Thursday, they are expected to hold high during that of the Friday and book profit with regard to their holding long positions and make one drop for the long holders to liquidate the long positions and again gain and book profit with regard to their long positions. So they induce traders to sell and gain the levels and induce the traders to do the short covering. And during that process, after the gains, if you buy, you may be forced to liquidate during the drop. And during the drop, if you buy, you will be able to really book profit during the rise. But so the traders have got the tendency to do the breakout trades. Many of the analysts nowadays trying to give only the breakout trading strategies because that appears to be a foolproof trading system, because you will be able to quickly see when the market goes above that of the resistance, then there is a potency for it to make an upward move. But the players, after seeing the traders' commitments, they are trying to make either way stop-ins move quickly using some stories or some news events, etc. And finally you will find that they induce the traders to go in for a breakout trade and subsequently trap them as well. So you find the market is making either way volatile move, USD gaining move one day, USD weakening move the other day, and they alternate. And on Friday, Thursday, you would have noticed that they made a massive gain in the case of Euro and GBP, but Friday they just booked profit. That sort of moves they are trying to do it in the market, and people will not be in a position to see whether there is a continuation of the bullish move or a continuation of the bearish move. And why they are doing like this? There should be a reason for it, because the traders tend to do swing trades, and so the players also need to make such moves in order to accumulate the positions. So what they have done, probably you know that in the beginning of this month and also end of May, when I gave the webinar in the last time, Euro was around 1.29 and today it is around 1.33. So 400 pips gain are seen. And GBP, if you refer to my last recorded webinar, you will be able to understand. GBP was around 1.51 and which has come to 1.57 area. And Yen was around 100 which has dropped to 94 area. And USD CHF was around 0.96 level. From there it has dropped to 0.92 level. Whereas Canadian dollar, it was around 1.03, dropped to 1.0150, and Australian dollar was in the same level. So you find the commodity pairs are making either way swings in the market, and only the majors alternatively gain the levels. So as I explained in my earlier webinars, that in the month of July, USD weakening moves are expected. As a result, in all four majors, we have seen the USD weakening moves. And subsequently, what is expected to happen this week and next week? And I'll explain to you with the help of this slide. So, this week, they are expected to make the week beginning false move, either way swings in the market. Euro and GBP are expected to nominally gain and slide alternatively, and USD Yen is expected to make a slide again, come closer to that of the low and then gain, and GBP is also expected to make a slide and then go up, make either way stop-ins. Then USD CHF is expected to make less dip and more gain moves, and in the case of commodity pairs, they are currently making the USD weakening move. USD CAD is making 17 pips negative net change. Australian dollar is making 43 pips positive net change. So these two are making USD weakening move, whereas Euro GBP, USD Yen and USD CHF are making USD gaining move. So this is a contrarian move in order to handle the crosses of the commodity pairs. So after handling the crosses of the commodity pairs, they are expected to come to that of the majors in the sequential trend reversal moves. So in this week, let me repeat, Monday they are expected to make the week beginning false move. Then Tuesday either way stop-ins, so you can only aim to do swing trades. If you buy near that low, you exit near that of the high. Alternatively, the numerator as well as the denominators. So when the numerator is correct, you buy near that of the low and book profit when they rise. Then buy denominators when they drop and book profit during the rise today and tomorrow. Then from Wednesday onwards, you can just buy Euro and GBP near that of the low and wait for the gains on Thursday or early part of Friday and book profit. Then afterwards, you can continue to hold whatever the denominator currencies you have bought on Tuesday, and that can be booked on Friday when they are making the rise as a position trade. During the trending time, you can do the position trade, and during trend reversal time, you can only aim for swing trades. So the next week, 24th to 28th of June, will be the last week of the month. So last week of the month, they are expected to make the trend reversal moves with an upward bias. So they are expected to slowly gain the levels in the case of Euro and GBP as well as USD CHF and USD Yen. Keep that in mind and try to trade accordingly. So avoid doing sell and buy trades in the case of numerators as well as the denominators. In the case of numerators, when you do buy and sell trade, denominators you can do sell and buy trade only on today and subsequently avoid it. Then coming to that of the market reading technique. So we note down the initial lows and the highs around 3:30 GMT in 4 majors and 2 commodity pairs and try to read what type of moves they are expected to make during the course of this particular day in sequence. So what they do it in sequence. During the session start time, let me just show. So each session, say for example Japanese session, it is from 0030 to 7 GMT. So 1.5 hours from the start of the session, they handle the majors. Then 1.5 hours towards close of the session, they handle the majors. In between, they handle the crosses. So mid sessions, they handle the crosses. And there is a gap time between the sessions. So between Japanese and the European, from 7 to 7:30 GMT is a gap time. Between European and US, 13 to 13:30 GMT is a gap time. During the gap time, they make the false moves. And during the start of the session, if you want to trade in majors, try to focus during the early part of the Japanese session or late part of the Japanese session in order to enter and exit. And if you want to trade in crosses, you just focus during that of the mid sessions. Then you will find your trading decisions will be fruitful and accurate. And if you simply look into that of the live market code page without applying the sessions the session timings, then you may find it confusing. That is what happened with regard to the charts. When you look into the chart, we are not able to find out whether it is in which session, even though we call it with the different sessions with different timings. But when you look into that of the chart, we continue to look it as a continuation of the price action. Then you find the continuation of the price action, if it is totally automatic and if the market is not influenced by human, then we can continue to look into that of the chart as a continuation of the price action. But whenever the session, early session and the late sessions, when human beings are active in participating in the market, then obviously we have to find out when exactly they are going to be active, when they are not going to be active. That is very important for us to draw the line in the charts. So invariably when you look into that other chart, we try to find a peak. At what time the peak was formed, we don't consider it. And we simply find out the peak. From there you draw the line on the downside or on the upside, and also try to synchronize with it of the moving averages. Then you find that chart is not in a position to exactly give us what we require, when to enter and when to exit. Then we look into only the price, and when you look into the price and try to place the orders, the players make the stop-ins and just hit us. And to avoid it, we try to keep far away the stop. Sometimes people recommend 60-70 pips stops also. And later on you find they may say that 70 pips risk and 210 pips reward. So 1:3 reward, risk-reward ratio. So it is fine. So you can keep 70 pips stop. But when they hit your 70 pips stop, then 210 pips profit is not going to be realized. So we need to understand how the players, when they manipulate, they try to see the session timings and try to make aggressive moves in the market. Why they make such moves in the market? Because when the traders actively participate, only then they can make the swings. And when the traders are not actively participating, there is no need for them to make big swings in the market. So sudden jumps on the upside or on the downside becomes useless if the traders are not looking into that market or traders have not participated in the market actively. Besides the small traders, they are also targeting the big traders like the banks and the financial institutions. When they commit such positions, the players try to trap them and try to earn from them. So it is not only trapping the small traders, it is also a mechanism to trap all the participants in the market by the big players. So we need to understand, even though the big players place the orders through the bank official channels are placed differently from that of the players' orders. So we need to understand it, and only if you are associated with any bank or associated with any person who knows how exactly the orders are being flown into that of the market, you may not be able to get convinced. But keep in mind, it is a man-made market, and in a man-made market, only the manipulation gives the reward for such huge investors or the players, and we can only trade along with them, reading their mind. So in reading the mind, we go in for the market reading technique, because we need to understand what is going to be the type of move they are going to do it in the market. Then accordingly, we try to take the positions. Now let us compare the initial lows and the highs with regard to that of the current highs and the lows in the market. The initial highs and the lows are set around 3:30 GMT. Current time is 5:20 GMT. So in the case of euro, 1.3322 was the initial low, and they breached it by about 4 pips. 1.3318 is the low. The high is intact, 1.3358. Similarly, in the case of GBP, 1.5703 was the initial, 05 was the initial low. They formed 1.5692 as the current low, and market is holding near that of the current low in the case of euro and GBP. So it is 521 GMT. You can just watch how they are doing it as a weak beginning false move. So they breached the initial low, and the high is intact. So that means what? They are trying to make the USD gaining move and trying to induce the traders to do sell and buy trade. Because when they breach the supports and go below the supports, the psychological supports, and also go below that of the technical support, then the traders tend to go in for sell and buy breakout trades. So they want the traders to commit positions, and later on we will know how exactly they are going to do the moves. I'll explain to you. Then in the case of USD-Yen, 94.12 is the initial low and 94.78 was the initial high. They quickly made an upward stop, and in the case of USD-Yen, 94.78 above, 94.83 they went up and came down, and now below that of 94.78. So even though euro and GBP are making the dip and staying below that of the initial low, they made a quick upward stop, and in the case of USD-Yen, in order to make a slide again, going closer to that of the low as a false move, or they may just breach the 94.12, hit the stops below that, and hit the stops below the psychological level 94, and earlier you know that they formed 94.80, probably they may just go to 93.95 and things like that and try to go up. So in the case of USD-Yen again, they made the upward stop, and in the case of the high, 94.78. In the case of euro and GBP, they made the downward stop, but they are staying below that. We have to find out for 30 minutes whether they are going to stay below that as an extended move, or it is a brief stop. And because it is happening in the mid session, so it should be extended stop, and extended move is for 2 hours. So they are expected to hold below that of the low for at least initial low for 2 hours before making a rise. Because if they would have finished it, and definitely in 30 minutes time frame, they would have come above that of the initial low. So which indicates that they wanted to do for 2 hours from 5 to 7. Then later on towards close of the Japanese session, they are expected to form up euro and GBP in order to continue the rise during that of the early part of European session. So this is how we have to fine tune the expected market move derived, say, swing and firm up during Japanese session. So swing is nothing but a small up and the down move within the initial high and the low, and subsequently they are expected to firm up and go closer to that of the high. Now in the market, if you see, they just breached the initial low and staying below that of the initial low. In observation, if you watch for another 10-20 minutes, they will still try to keep below that of the initial low, and they may come up to that of the initial low 1.3322 or 23 or 25, but they may not sustain above that of the initial low for more than 30 minutes in order to make the gaining. So they are expected to keep below that of the initial low, and later on towards close of the Japanese session go closer to that of the high. So when they induce the traders to sell when the supports are breached, and later on they will try to gain the levels and induce them to do the short covering. This is how they induce the traders to commit wrongly, look into that of the technical charts, and later on induce them to book loss. So this is the earning mechanism. So we should not become victim for such act. In the case of USD CHF, 0.9208 is the initial low and 9240 was the initial high. They went above that by 2 pips and come below 9238 and 9241. So they are just holding it, similar to that of USD yen. So they are not continuously gaining the levels in the case of denominator currencies. So they simply hold and making dips in the case of numerator currencies, and later on when Euro and GBP gain denominator currencies during early part of the European session, they are expected to make a drop and hit the stops below that of the low before making the rise. Then this is how we have to compare the numerators and the denominators. These 4 pairs, if we carefully compare, you will be able to understand how they intend to make. Then if you compare it with that of the commodity pairs, you will be able to understand which cross they are handling. And sometimes you will find all the numerator currencies showing negative net change, all the denominator currencies showing positive net change as a USD gaining move. So that sort of moves they will try to do during session start and the session close time. But during the mid sessions, they are expected to make the contrarian moves. Keep that in mind. Then in the case of USD CAD, 1.0154 was the initial low. It is intact. 1.0175 is the high, which is also intact. In the case of Australian dollar, 0.9559 is the low, 9622 is the high. Both are not breached. So now you can understand how they are focusing more on the majors and not on the commodity pairs. They are not breached the initial low or the high in the commodity pairs, but in the case of majors they have done it. And why? Because they are holding the majors. They are trying to make a downward as well as the upward stop and or the USD gaining move in the case of majors and USD weakening move in the case of the commodity pairs. Thereby the commodity crosses are being handled. If you look into the commodity process, you will be able to understand. Always keep in mind as far as the cross is concerned. Let me give one example, then you can follow the rest. Now in the case of Euro Yen, it is currently trading around 126.15. 126.36 is the high, 125.63 is the low, 50 pips positive net change is seen. So how this 50 pips gain has come? In the case of Euro, it is only 18 pips negative net change, and in the case of Yen, 51 pips or 52 pips positive net change. So when the denominator gains, it is the USD weakening move. When the numerator loses, which is the USD gaining move. But USD gaining move in the case of Euro is less. So when compared to Yen, Euro is relatively stronger against US dollar. So as a result, you come across a net change or gain in the case of Euro Yen. Euro is slightly stronger when compared to that of Yen. As a result, you find there is a gain in the case of Euro Yen. So we have to find out the numerator currencies and its net change, the denominator currencies and its net change, what they are trying to do. And they also make contrarian moves in the case of Euro and Yen, USD Yen. Sometimes they make positive net change in the case of, whenever they are making massive moves, they show positive net change in the case of Euro as well as positive net change in the case of USD Yen. Then you will come across 100, 200, 300 pips net change in the case of the cross Euro Yen. So always keep in mind, by handling that of the majors, they bring in action in the case of crosses, but they spread the information in the market that there is a sudden sprout in the volume in the case of crosses. Because of that, the majors have undergone drastic price action. But it is actually other way about. The players suddenly makes the contrarian moves in order to bring in quick moves in the case of the crosses. So today's expected market moves: swing and firm up move during that of the Japanese session, and firm up again nominally during early part of the European session. So note down the timing so that you will be able to find out whether market is behaving accordingly. Then slide towards late European session. Then swing and swing during that of the US session. Small swing on the either side. So it is the third week of the month. They are expected to make more of the USD weakening move. So first day you come across USD gaining move as a week beginning false move with regard to the majors, and later on you will find the USD weakening move happening in the market. And in the process, the numerators are expected to show the USD weakening move and the denominators are expected to show the USD gaining move as a contrarian move. As a result, we are expecting the good gains in the case of the crosses as well. So contrarian moves may be seen to handle the crosses during this particular week. So any currency drops or buy opportunities, but I could suggest that avoid taking positions in the case of commodity pairs. If you do, you can only do either way swing trades in the commodity pairs. You may not come across relevant moves what you come across in the case of majors. So if Euro or GBP gain about 600 to 700 pips, Australian dollar may not gain that much. Similarly, Canadian dollar may not drop that much, equal quantity. So our aim is to gain maximum profit out of the trades. If they move about 200 pips in our favor, we get 200 pips profit. If it moves only 20-30 pips in our favor, we get only 20-30 pips profit. But the commitment is the same. One lot commitment in Australian dollar or one lot commitment in euro, you have to block the same margin. So choose the currency depending upon the type of moves they are making in the market. My humble suggestion will be, try to focus on the majors, especially in the case of Euro and GBP. Whenever they are near that of the low, not breach the low for more than 30 minutes, you can take a buy. And similarly in the case of the denominator currencies, whenever they are closer to that of the low, you try to take a buy. And try to keep the hedging order to limit the risk. Once the position makes profit, keep stop at entry and remove the hedge order and try to maximize the profit. And you would have noticed in the case of Yen and USD Yen and USD CHF, they made the drop. In the case of Yen, from 100, 101, they dropped it to 94 and briefly shown 93 area. But in the case of CHF, from 97 area, they just dropped it to 91 and 92 area. So they are expected to gain back the levels in the case of denominator currencies and slowly gain the levels in the case of the numerators as well in this week. So look for such moves and try to do the trades accordingly. So we have to choose the right time to do the position trade. And always my recommendation, if you are not in a position to recognize what time you can do swing trade, what time you can do position trade. The best thing is you try to take a swing trade and keep stop at entry. When the going is good, you trail the stop in the profit making position 75 pips away from that of the market. Then it can be a good position trade. And if you want to do a swing trade, keep 30 pips trailing stop, and that will be a good swing trade. Keep the limit also so that the market might protect your profit by hitting the limit on the upside or your trailing stop on the downside. Ultimately, your profit will be protected. So in a profit making position, use the trailing stop, and in a loss making position, use the hedging order to limit the risk. So there are questions asked here. Let me try to answer to the questions. Okay. Adi has got a question. If players want traders to do sell and buy, and we should wait for the drop to do buy and sell, you are right. Then as per the trading strategy, how does one decide to buy if the price is below the low? Okay. Now today we have seen that initial low in the case of euro Let me explain with regard to euro. 1.3322, currently you find it has come to 1.3322. But it has to stay above 1.3322 for more than 30 minutes if you want to buy near that of the initial low. Otherwise, you have to wait for the late session. Now it is the mid session, 5:30. So when the late session starts from 6 GMT. So if they stay above that of the initial low till 6:30 GMT, 5:30 they have come to initial low, and if they stay till 6 GMT, then 6 to 7:30 GMT will be the late session. They will try to firm up. At that time, if you buy, you will be able to book profit near that of the high, and they will become definite trades. So as I told you that if you are trading in majors, you have to wait for them to stay near that of the initial low. And if you want to be a smart trader, when they form the new low and not breach the new low for 30 minutes, you can buy and keep 30 pips below that, the hedge order, and try to move stop to entry once they go above that of the initial low, then close around 7 GMT when the session close, or trail the profit in profit making position, the stop, and try to maximize during start of the European session when they firm up quickly. Hope you are able to understand how it has to be done. So always 30 minutes you have to follow. When they form the new low, they are not breaching the new low for 30 minutes. And when they come above that of the initial low, they stay above that of the initial low for more than 30 minutes. There comes the failure in understanding of the traders. When it comes above that of the initial low and stay there for 10 minutes, immediately they buy. And many of the technical indicators say that the resistance turns support. But if it does not stay for more than 30 minutes, it has got a likelihood to fall down further as the intentional move beyond 2 hours. So we have to find out what type of move they are trying to do it. So it is not staying above 1.3322 now. So you watch for such moves, and they stay above 1.3322 for more than 30 minutes, then you note down with the help of the GMT time, and they stay above there, then you try to buy as a safe trade. And if you want to take a little bit of risk, and then you see whether they form the low and not breach the low for more than 30 minutes, then you try to take a buy near that low. Hardly there is a difference between the initial low and the new low, only 4 pips. So since they are not breached the initial low for 30 minutes, you can try to take a buy. Still we have the hedge order, because why we use hedge order? Our decision may be wrong. So even though we try to do all type of calculations and understand the market and try to read the intentions of the players, we try to take the positions. But sometimes they can make whipsaw moves for any event or a data release, or sometime they may get the information that a lot of traders have taken long positions here and they kept the stop below 1.33. Then why they should just avoid taking the profit? So they can straight away go below 1.33, hit the stops, go up to 1.3388 and fill all the stops and go up. So we cannot prevent it. No, they are the kings. So obviously their rules are going to work in the market and they know where to earn money. We won't be knowing it because even the volume is not disclosed to us. Where the orders are placed is not disclosed to us, but they know about it. So what you can do? When they make such moves, we use the hedge order to limit the risk. And once the hedging is making loss, we know that, okay, during a small downward dip, they filled our hedge order, and hedging is making loss for 10 to 30 minutes. We close the hedging and keep another hedging order to limit the risk. Automatically you find that they start rising. In the event if the hedging is making profit, we keep stop at entry. Let them go down even 100 pips, doesn't matter. Then let them reverse it afterwards. Your hedge will be closed at stop at entry, and then later on you will find you are able to book profit on the buy side as well. So if you use hedging, there are a lot of benefits. You can just attend to other work by keeping the hedge and limiting the risk. And every time you have the comfort while trading that I am not taking unlimited risk. I am only taking a risk for 30 pips. So the market fear does not grip you, and you are able to read using the common sense or using the technique what I explained, that okay, this is what they are trying to do it in the market, and try to do safe trades. Then Chowkit, what is your view of Australian dollar this week? Australian dollar may gain to about 0.98 area. And don't expect big gains in Australian dollars. Okay, no more questions. So let me just explain to you the expected market moves for this week. So 17th, they are expected to make subdued moves, swing and firm up during Japanese session, followed by a firm up and slide during that of the late European session, and swings during US session. Then on 18th, a small dip during start of the day and then rise, then swing and slide moves. Either way stoppens, they are expected to rise during Japanese session. I mean from low to high during Japanese session and high to low during European session. And then after making a downward stop, and they are expected to make a quick rise during US session. Either way stoppens on Tuesday. Then Wednesday, they are expected to, after accumulating all the buy positions, they are expected to gain the levels, quickly swing and rise during that of the Japanese, European and also US sessions. Little bit of slide is expected during late US session. Then on Thursday, they are expected to make the visible gains in Euro and GBP, and also the gains seen in USD Yen and USD CHF are going to be held, and they are expected to gain the levels in the numerators. So denominators are gained to first, and later on the numerators are expected to follow. As a result, you will come across that crosses are expected to make a big gaining moves in this week. On Friday, they are expected to make the gaining moves till European session, and a drop and the gain are expected during US session. They will just make such moves and liquidate their long positions and lighten their positions. And next week, they will engage themselves in weekly trend reversal month-end trend reversal time. During that, either way stop ends, they are expected to make and earn big money. And you know that June end is a second quarter end. And during second quarter end, like March end, how they made big moves, they are expected to make very quick aggressive moves next week in order to earn either side stop ends and also to handle the derivative markets, the options and the futures, etc. And then they will be making massive gains in order to improve their balance sheet on the last week of the month, the quarter. So keep that in mind and try to carefully trade. And there is a question from Sundaram. USDN to 100. USDN is expected to soon rise to 100 this week and next week. So I take this opportunity to thank everybody who have come here to listen to my webinar, and also FX Street for the kind consideration and facilitating me to present the webinar. And on 24th, next Monday, again I will come back and do the analysis and compare it with this week and try to explain to you how this week the trending with upward bias is expected. Next week, either way stop ends, they are expected to make as the month-end trend reversal moves. So anytime you can contact me through the email for any further clarifications, dr@i-noindices.com. I am willing to answer to your questions. So thank you one and all. Wish you happy trading during the new week.